right, you guys, welcome back to a brand new episode of the Pursuit of Progress podcast, where we explore real estate, self improvement, and just how to get better every single day. I'm Adam, and as always, I'm here with my co host, Ben. Today, we're going to be diving into one of the most overlooked, but definitely very critical parts of a real estate contract known as contingencies. These little clauses can really make or break your deal. Whether you're buying or selling, understanding how to use contingencies to your advantage and also when to avoid them is the key to protecting your money and keeping your deal alive. So we're going to be talking today about inspection deadlines, appraisal gaps, home sale contingencies, and a lot more. Plus, real-world examples that cost people thousands of dollars because they did not understand what they were signing. Really excited, guys. This one's going to be a very informational, very practical episode for anybody out there that's either seriously considering buying a home in the near future, or you're just trying to, level up your education a bit when it comes to real estate 101. So, Ben, welcome back, buddy. Hope you're having a good week. How's things going, man?
Things are going great, and so excited for this week's episode. Also very relevant too, especially in this market here in Denver. I know other markets are experiencing the same thing, seeing a lot more contingencies of every kind. So really, really excited and I've actually been getting that question from home buyers more, just asking about different contingencies. The sale of home is a very common contingency, but I had a home buyer ask me, because we couldn't get him pre-approved. His credit score was a little bit too low. He was in the 500s. And he was like, well, can we do like a credit contingency to where I can get pre-approved contingent on me getting my credit up? And I was like, I love the thought, but I cannot issue that letter because that's it's like the foundation of a pre-approval is the credit. So, but speaking of contingencies, I wrote down this quote from Warren Buffett, and it's specific to contingencies in real estate. And this is what he says. He says, risk comes from not knowing what you're doing. That could not be more true in real estate. Contingencies aren't just legal language. They are tools for protecting yourself when things don't go exactly to plan. And spoiler alert, they rarely do. That's Warren Buffett on the importance of contingencies in real estate.
Love it, man. Yeah. So as far as contingencies, for anybody out there that's not familiar with that word, if you're in the real estate industry, if you're a real estate agent or a lender, or you've just maybe bought or sold a home in the past, you're hopefully somewhat aware of contingencies. But just so anybody else out there that does not know, contingency is just a condition that must be met for the contract to proceed. Think of it kind of as like a legal escape hatch or like a safety net for buyers, but also sometimes for sellers. And, it's really important to understand that if misused or misunderstood, it could totally blow up your deal. So it's something that's very important to understand, not only as a seller to be aware of any contingencies that might be in any offers that you're receiving on your house, but also from a buyer's perspective, understanding how you can really leverage these contingencies to make sure that you're putting out an offer that's serving you as best as possible, and can also sometimes be a way to creatively get the deal done. So we're going to talk through specifically on this one, 3 big contingencies. And Ben, I'll let you kick us off with the first of the 3, which is the inspection contingency.
Yeah. And you know what? I'm actually going to add a 4th. So I'm going to add a surprise. So ask me what the 4th is when we get there, because I'm adding a surprise for our viewers.
All right.
But our first contingency, and backing up, our Colorado real estate contract, the reason that I love it so much is because it is so just pro buyer. There are so many contingencies on there. And that's one thing that like first time home buyers don't always understand. Sometimes they can get so hesitant to turn in that earnest money or write an offer even. They're so afraid just to write an offer because, what if it gets accepted and I go under contract and I have to turn my earnest money in? But you have all of these different contingencies where you can walk away from the deal or cancel the transaction for any reason under these specific contingencies. The first one is the inspection contingency. And what the purpose of the inspection contingency is it protects the buyer in case the home has any major issues. And so typically when you go under contract, you have usually a week to 10 days to get the inspection completed. And at that time, with your real estate professional, an inspector is going to come out to the property and they're just going to They're going to inspect the home. They're going to look at everything. They're going to, you're literally paying someone to find problems, and they are going to find problems. It doesn't matter how new or how old the home is, there will be problems. Every single home that any buyer has ever bought, there have been issues on the inspection, because there just are. Nothing is done 100% perfect. So you're paying someone to find what those issues are. Then you, as the buyer, you then have the opportunity to uh, move forward with the transaction. If you have any objections, you can go back to the seller and say, I want these issues to be resolved. Maybe there's a radon issue. Maybe the sewer line is clogged. You say, I want this cleaned out. I want to get the radon added. The seller can agree to that or not, or you can cancel the transaction under this contingency and get your earnest money back. So it's so important because, number one, you want to know what you're buying. And typically there is a cost for the inspection. It can be anywhere from $300 to $500 usually. But it gives you that opt out where you can cancel the transaction if you don't like what you're seeing on the inspection.
Definitely a few red flags to be aware of too, you guys, specifically with real estate. Buyers that are being really aggressive as far as what I hate to see, especially if I'm representing a seller, is somebody that you know gives a full price offer for what we're asking, but then comes back during this inspection phase and asks for $50,000 worth of inspection stuff. Just it happens. But what's important is when you see some buyers that are being overly aggressive like that, it's pretty rare that you're going to get to the closing table with them. They're not the most ideal client to work with, or at least not client, I should say, other side of the party, other side of the transaction to work with. And kind of the same thing, sellers, if sellers are being really difficult with allowing time for the inspections, those are just some red flags. So if you're having on either side of that kind of stuff coming up, just be aware that, that might be a good reason to, maybe consider finding a different home or maybe finding a different buyer.
Yeah,
But
and if those red flags are popping up, don't be surprised if they pop up again later in the transaction.
mhm. And I think, though, you hit a really good point about just using the inspection contingency also as a great opportunity for further negotiation. So if you are on the buying side, just realizing that this is a great opportunity to hopefully get a little bit more money as a concession at closing, or if nothing else, having the seller repair anything that maybe isn't up to your standards. More so often than not, the ones that I always recommend for my buyer clients is anything that's health and safety related. So if it's something like radon that Ben mentioned, which is an odorless gas that sometimes is pretty common in different parts of Colorado, or maybe it's old, outdated fire alarms, smoke detectors, carbon monoxide detectors, stuff like that. That's health and safety related. Those are very easy to get as a concession, paid for by the seller usually. So this is always, though, a really important contingency with every transaction for the most part.
All right, lead us on to number 2, Adam.
All right. So after the inspection, another big one is appraisal. So an appraisal contingency is just to ensure that the buyer isn't overpaying relative to what the lender is valuing the property at. So when you have an appraisal done, this is a third party that's going to be a requirement if you are getting a loan on this new house that you're purchasing. And the appraisal is, again, just a kind of a safeguard to make sure that this collateral that's going to be in the form of this house that you're purchasing is valued at the proper amount. And this is a big one. Appraisals are, however, avoidable, or it's a contingency that can be waived, as is the inspection actually in certain cases. So a couple years ago, when it was a really, really hot seller's market where there was a line out the door of buyers that wanted to buy the house, in order to stand out among other buyers, a lot of times the only way you'd even get your offer accepted is if you waived a lot of these contingencies, specifically the inspection and also this appraisal. Now, the only way you can waive the appraisal contingency is if it's a cash offer. These are, things to keep in mind that I don't necessarily recommend doing unless you are really confident in the home's condition and you are trying to have a strategy to really set yourself apart from others. It's still a very important contingency to take seriously. There's definitely somewhat of a danger zone when it comes to appraising the home, a really low appraisal can tank the deal. But a reminder, the appraisals are being done by a third party. So it's not somebody that's working for you. It's not somebody that's working for the seller. So if they've, hired a good appraiser, hopefully they're going to be fair and they're going to give a truly accurate appraisal amount. And their license, the appraiser's, livelihood, their job is reliant on them doing a good job. So they have some skin in the game too, as far as not being biased and not maybe giving a false appraisal.
Yeah, and they also aren't affiliated with the lender either. And so they really truly are an independent third party. And the reason it's so important is because, what you mentioned, you want to make sure that the home you're buying, the value or the opinion of value reconciles or is greater or equal to what the agreed upon sales contract price is. And if it's not, if the sales price is 500,000 and it appraises at 480,000, well, as long as that appraisal contingency is on there, you as the buyer in that case would have the option to go back to the seller and ask them to renegotiate the sales price. And if they're unwilling, at that point, you'd have the ability to cancel the transaction and get all of your earnest money back. So that's what's so great about all of these contingencies is it gives you, the buyer, an out to cancel the contract and get that earnest money back. Now, I've done some deals where the earnest money is $1,000 or $2,000, but I can't remember if I shared this with you. I did a deal last summer, and guess what the earnest money was?
Yeah, I think you did share.
It was an out of state deal in Miami. It
was like over $100,000, wasn't it?
It was like 250,000. The earnest money.
Wow.
And so me as the lender, I'm like, I mean, the earnest money was 10% of the home's value. And so that's pressure for the lender because, I have to make sure we execute on the loan because they have, there's these contingencies and, after you pass those deadlines, at that point, there's no turning back. Mm-hmm. So yeah, just these contingencies are meant to protect you, the buyer, and your earnest money.
Before we move on, I'd like to just also have you explain a little bit to the audience what an appraisal gap is and how that could be a solution or a strategy for negotiation and maybe getting an offer accepted.
Yeah, and this was a strategy that you saw a lot more a couple of years ago, as you were mentioning, when the market was really, really hot, where an appraisal gap, say that the home was listed for 600,000 and someone writes an offer for 700,000, so $100,000 over the sales price. And then in that, they're writing an appraisal gap for 120,000. So in that scenario, if the home's listed for 600,000, the sales price is 700,000, that appraisal gap would cover, essentially 580,000. So if the home came in at 590,000, that would still be within the $120,000 appraisal gap. So that appraisal gap, even if the home appraised for 590, the sales price is still going to remain at 700,000. But for loan to value purposes, the lender is going to go off of that 590. So what that means is the buyer has to make up the difference, not the seller. So in that case, sales price still stays the same. Buyer makes that up out of pocket. And something that you saw a little bit more with different markets as the market changes, you see different strategies. So now with it more of a buyer's market, you're seeing things like seller concessions, price reductions. You're seeing seller credits for temporary or permanent buy downs. And that's why it's so important to work with competent real estate mortgage professionals because the market can change so quick. I mean, it's only 18 months later, and we're in a very different market than we were at the end of 2023. Buyers now have so much more leverage than they did. And even though interest rates were higher in 2023, it was still more of a seller's market. So things can change very, very fast.
So oftentimes when it's pretty much a requirement these days, when you're putting in an offer, you need to have what's known as a proof of funds, just basically showing the seller. So as a buyer, when you're writing an offer, in addition to submitting the offer, you're also including a proof of funds, just showing that you're capable of affording this house. So when you have an appraisal gap, in addition to, I guess, is there a different way of showing that on a proof of funds, or is that just, I guess, incorporated into the dollar amount? Like you were saying, if it's a $700,000 home, but it's only really valued at 600,000. As long as you're showing proof of funds of 700,000, there's not really any difference there. I've never dealt
Yeah,
with
I
an
mean, yeah,
appraisal gap.
normally me as the lender, I will put that on the pre-approval letter. And so I'll reference what the down payment is. And then if there was something like an appraisal gap, I would also put in the remarks, buyer has verified with the lender, X amount of dollars for the down payment, and then also X amount of dollars for the appraisal gap. That way the seller and the listing agent knows that the buyer has gone through and verified those funds with us, the lender, so they can feel confident that it's been verified.
Got it. Okay. And then let's talk about the third main type of contingency, which is a home sale contingency. And I've been dealing with this one a few times recently, and this is a pretty common one. And this is basically just as a buyer, let's just say you're trying to buy this beautiful new home that you found, but you haven't sold your current home yet, and you need the proceeds of your current home in order to afford and pay for this new home. So there's a line item within the Colorado contract that's a conditional sale section in the contract, and that's what this is referring to, where your home sale, or I should say the home purchase, the offer that you're writing to buy a new home, is contingent on a home sale, so the current home. And when you do this in the actual offer and in the contract, you actually have to write out the address of your current home. And if it's a good real estate agent that's on the selling side, they're going to do a little bit of due diligence and hopefully verify that. But before letting you add your 2 cents on this one, Ben, I just wanted to point out that there's also different types of home sale contingencies that can be stronger than others. So if you have a home that you haven't even listed for sale yet, and you're trying to buy a new home, that's a very weak contingency because you haven't even listed it yet. You don't have any interested buyers yet on your current home. It's a big ask for the seller to go under contract and take their home off the market, relying on you to still sell your home. They have no control over, what you're pricing your home at, if it's being marketed correctly, if it's, in good condition. What's a lot more strong of a contingent home sale offer is maybe you already have it under contract, or maybe you got it under contract and you've already gone through both the inspection and appraisal phase of your current home that's under contract. So there's different levels, and it's just important to bring this up because as a realtor, whenever I represented my buyers before, I've always made it very clear to the sellers that it's not just contingent on the home selling, but also alluding to what stage that home is in and really upselling them on, well, we've already made it through the inspection. And once you get through an inspection, usually the chances of it going all the way to the closing is a lot higher. So you're giving even more confidence to make that contingency not seem quite as much of a burden on the sellers to agree to.
Yeah, and you are seeing more contingencies right now. I have actually several contingencies that I'm working on this month with buyers. And, I have this buyer who's selling a property in Applewood. And, that's the neighborhood that I'm in. And she's buying something in Denver. And I feel so bad for her because, the purchase, the home that she wants to buy, is contingent on her selling her Applewood property. And it has fallen out. It has gone under contract and fallen out of escrow 3 or 4 times now. And so one time we got within 10 days of closing. And so, when you start thinking about financing, and we're keeping the seller, the agent is keeping the seller and the listing agent involved, but it's so great because there's not any risk for her. But as we are having to extend some of these deadlines, the seller is saying, we will extend your finance or your home sale contingency again because it fell out, but half of the earnest money is going to go hard now because now we've spent a month under contract and you're having to go get under contract again. And so that's what happened the first time. So half of the earnest money went hard. And then the second time when it happened, now all of the earnest money is hard. And again, these are conversations that everyone is involved in. And in this case, the buyer agreed to it. And thankfully, she's back under contract. But, just kind of an example of what a real life situation looks like. And, it's frustrating when you want to buy the home, but the person that has agreed to buy your home is either backing out or causing problems. So you can't then move forward with the purchase. So that's kind of the one drawback of the contingency. But for a lot of folks, it's the only option that they might have, because most people can't afford to qualify with both homes, meaning that they'd have to qualify with two different mortgage payments. And then, one other example, I had this scenario pop up. I was working with a buyer who I had gotten pre-approved over the weekend, and he was so excited. He's like, you know what, we're putting an offer in. Please send the pre-approval over at 550. We're excited to get this offer in. And he started talking to me about it. And he's like, yeah, he's like, the only part I'm not sure on is it's a short sale. And I was like, a short sale? I was like, I mean, you may not, I mean, you need bank approval. It's not even up to the seller. I mean, and so in that example, there's a short sale contingency. So for this buyer to purchase the home, because the seller doesn't have enough equity to pay off their existing mortgage, they would need to get bank approval. I haven't seen short sales in 15 years. So when he started talking about this, I'm like, you need to go find another property, because bank approve, I don't even know if banks are approving short sales at this moment. And if they did, and if they're willing to even consider it, I mean, you're talking about a 6 to 9 month to a year process. I mean, banks do not want to do that under any circumstances. I didn't say anything, but you just, hey, seller agrees, seller signed the contract. It doesn't mean anything though, because you need bank approval.
Mm-hmm. Yeah, it's a tricky one. So let's talk through just a couple, tactics for a competitive.
Wait, I had the bonus.
Sorry, man.
You
I forgot about that. Yeah. What's number 4?
Okay, number 4, and I'll be brief here, but the bonus contingency was the financing contingency. And what's great about the financing contingency, especially here in Colorado, is a lot of times that's going to be one of the last contingencies on the contract. So let's say, for example, you're closing on the 31st. Well, it's a great strategy to put that financing contingency on the 28th or the 29th, just 2 or 3 days before closing. That way, if for whatever reason you're past all of the other deadlines, all of the other contingencies, and there's deadlines and contingencies that we haven't even talked about, homeowners insurance, HOA, title, all of these are contingencies in the contract. If you're past all of those, and if for whatever reason the loan didn't work out, or you lost your job, or you had a workplace event and you went on disability pay, if for whatever reason, like you did not qualify anymore, that financing contingency is going to protect you all the way through the end of the transaction. So it's just kind of the final safeguard there. And in Colorado, there's actually a loan objection contingency as well. That always cracks me up, because that's just the buyer saying, I'm objecting to the loan. There's been examples where the loan's been, issued the final approval and it's been signed off on and we're ready for closing. But the buyer technically can object to the financing for any reason. They can say, the interest rate is not quite low enough, or the payment's a little bit higher than what I was thinking. They can literally object, as long as that objection deadline contingency is completed. And again, get all of that earnest money back. Now, one thing that you do have to keep up on with Colorado is that real estate contract seems to change every year. And a lot of times the language and some of the dates and deadlines can change. And so you just want to make sure that you're staying up to date on the changes with the Colorado real estate contract.
Mm-hmm. Yeah, you made a good point. There are a lot of other contingencies. I know we kind of hit on the 3 big ones, but as you said, there's home insurance, HOA, there's all kinds of other ones. And Ben also mentioned how, Colorado is a very buyer friendly state. An example of a state that's not as buyer friendly would be Arizona. So Arizona is a state where there's a lot fewer of these dates and deadlines, contingencies, opportunities to get out of the deal if you are a buyer. So we are very fortunate to have a buyer friendly contract here in Colorado.
And what I love about it is it just creates so much transparency and accountability for everyone. So there's no question. And that's why I love our all of the dates and deadlines are spelled out, the sales price, the earnest money, it's all very legible. Being licensed in all 50 states, I mean, there are contracts that I have to go through and literally read line by line to figure out what is the earnest money deposit? When is this closing? There are other contracts like in Colorado. If you don't agree to the contract and you counter it, the buyer does not sign. It's the counter, it goes straight to the counter and then they sign that. But there are other states where instead of doing that, you cross out an initial, like all of the changes on the original contract. And so you might have a contract that has like, if the sales price changed 5 times, it's been crossed out and initialed by all parties like 5 different times. And so it's just very, very difficult to navigate through in some cases.
Yeah, it's pretty funny or not funny, but just interesting how different contracts are in every state. I know I had a deal. It was actually a contingent offer that I had some buyers I was working with where they had to sell their investment property in California, and it was also part of a 1031 exchange. So they had to provide a proof of this contingent sale of their investment property in California. And just reviewing the California contract, it was completely different than ours, and just different look, different verbal structure of just how everything was written out. It was just interesting to see how different states can be. So, all right, so let's just talk now, last but not least, just about some of these tactics for contingencies, and what is potentially a good, and also maybe what is potentially not so good to incorporate into an offer if you are a buyer. Waiving a contingency can definitely help you win deals, but there is risk associated with that. So that's really important to understand. To have probably the most highly desirable offer for a seller, it would be a cash offer, contingencies waived for appraisal and inspection, short close. So you are seeing offers that are still like that, but since it isn't quite as competitive as it was for buyers, I think that these are less. You're still finding most offers that are having these contingencies in them to some level. Is that what you're seeing too?
Yeah. I'm seeing more contingencies now than I hadn't seen a home for sale contingency in probably like a couple years. And now it's something that's pretty frequent. When the market was very hot, homes were selling, but when interest rates were low and property values were still really going up, I mean, there were so many buyers. Even though if you had a buyer and they had a home to sell, I mean, chances were that they were going to sell it in a timely manner. But if you got 10 buyers and they all, if 2 of them are non-contingent, 8 of them are contingent, kind of like what you're talking about, it's not always about price. The 2 buyers that are non-contingent are going to have, probably a better chance of performing on whatever that offer is. Didn't see nearly as many contingencies, but now we're at least the home for sale contingency. We're seeing a lot more of those and seeing less of the. A couple of years ago, it was very common to see some of those contingencies waived, the inspection, the appraisal contingency. I mean, that stuff was getting waived when the market was really, really hot. And, now we're not really seeing that nearly as much.
One strategy that I've been using recently on a few deals for when I'm representing my buyers is, rather than waiving like an inspection contingency, I'll just reach out to my inspector before even submitting the offer, verifying that he has a date available within the next week. And then I'll actually include in my cover letter with the offer that rather than waiving the inspection, I'll just have it where, the inspector is already tentatively scheduled for next Tuesday at 9 a.m., just basically shortening up that window where, by doing so, especially with an inspection, if it's within the next few days after going under contract, the seller should have some confidence where, worst case scenario, the inspection happens. If it falls out of contract, usually it's during the inspection. So it's only a few days, out. They're more likely to accept that. If you have an offer that the inspection isn't for 2 or 3 weeks after the offer is accepted, then, that seller's, kind of putting more eggs in their basket where they're relying on it, hopefully going through and, having a good inspection. It's just a way to kind of minimize the risk for the seller and more likely for them to accept your offer.
And so you're putting that right on your offer letter. I've already contacted my inspector. He's available during this time slot, this window, and you're including that on the offer.
Yeah, that way it just shows a more serious level of intent, and showing some
That's a great
proactiveness, and
strategy.
also
I haven't heard that before.
showing that we're serious, and also showing that we're on top of it. We're already taking the next steps. Kind of an example of assume the sale.
Yeah, that's great. That's a great strategy.
Before we move on, I just want to take a quick moment to thank our sponsor for this episode. So today's episode is actually brought to you by Roadrunner Property Care, your boots on the ground partner for peace of mind in Tucson, Arizona. Whether you own a short-term rental, maybe a second home, or just an investment property, Roadrunner Property Care has your back. They handle everything from routine maintenance and HVAC checks all the way to guest coordination and full-on property management. If you want to protect your investment and skip the stress, visit roadrunnerpropertycare.com. That's roadrunnerpropertycare.com. It's your property, it's their priority. It's roadrunnerpropertycare.com.
Thank you again to our sponsors. And Adam Sells Denver, we know you're out there and we thank you as well. All right. Well, thank you again to our sponsors. Now let's kind of wrap things up in our closing segment here. Just remember some of the key takeaways when talking about contingencies. The reason contingencies are important is to protect you, your money, your earnest money in the event that the deal blows up for whatever reason. You're protected. You're able to stay in control of your timelines. The boundaries are clearly defined. You can understand your clauses and you have a plan for every contingency moving forward. And in this market, clarity, negotiation, skill matter more than ever. There are certain opportunities you as a buyer have not had in years. You're going to be able to work with someone like Adam, who is going to be able to represent you, knows what those opportunities are, and is not going to be afraid to pick up the phone and actually do some negotiating when it comes to seller credits, asking for certain contingencies, asking for a sales price reduction. Not all agents are willing to do that, actually pick up the phone and have those conversations.
Yeah, I think understanding these contingencies and properly incorporating them into the offer is really a great way to have your offer stand out among others. And also, I think a very clear example of how realtors and mortgage professionals, just people that are actually in the game, actually doing deals every single day, every single week, every single year. Those are the people that I think are really important now more than ever to be using, because they have these strategies and tactics that are proven to be winning right now. And it's just something that you're not going to find with brand new agents a lot of the time. So just something to just keep in mind, and definitely hopefully you guys can incorporate some of these strategies we shared with you guys today on your next deal.
Yeah. And if you have any questions, if you want to talk through anything, if you want to schedule a strategy call, we'd love to do that.
Yep, absolutely. Well, thanks, guys. Thanks for tuning in. And if today's episode helped you feel more confident about your next transaction, definitely share it with a friend. Hit that subscribe button. Leave us a review if you're watching on YouTube. And more than anything else, just if you're buying or selling this year, make sure you know what's in your contract before you sign it. It's super important to always be very clear and educated on what you're reviewing, what you're signing on the dotted line, because it can be a very important signature if you have minimal contingencies and you want to make sure you're protecting that earnest money. Hope you guys have a great rest of your week. We're looking forward to sharing a brand new episode with you next time on the Pursuit of Progress podcast.
Love you guys. We'll see you next week.